This is Raw and Real Entrepreneurship, the show that brings the no-nonsense truth of what is required to start, grow, and scale your business. I am your host, Susan Sly. Well, what is up, Raw and Real Entrepreneurs? I hope you're having an amazing day wherever you are in the world. And my guest today has become a friend, not just a LinkedIn friend. He's someone I deeply admire and respect. And we have some stories that are very, very similar. And he is not only an incredible founder, he's a serial entrepreneur. And on top of everything, he's resilient, which is so cool. So he is the co-founder of Ignition, which is a collaborative hub for marketing and product teams to plan, execute, and measure the go-to-market side of launching. And they have the coolest website, I have to say. Karthik is a product and a technology leader with experience as a founder, an early startup hire, and a key player in defining product strategy and finding a market fit. He has extensive experience building products in consumer, enterprise, and data domains across early stage and established companies. So Karthik Suresh is the co-founder of Ignition and an awesome human, in my humble opinion. Karthik, it's so good to see you.
Thank you so much for that amazing intro. Yeah, excited. Looking forward to our conversation right now.
Well, Karthik, I'm jumping in right now. This is Raw and Real Entrepreneurship.
Yeah.
I want to start with fundraising. So there's a lot of very interesting things happening right now because we're hearing about a ton of layoffs in tech. I was just this morning, the day we're doing the show, I was at a breakfast hosted by Snowflake, and people are talking about tech layoffs. Then there are companies like Snowflake that are hiring. Then they're talking about a VC drought. Then I know VCs that have just opened big funds. So in your opinion, what in the world is going on for startups that want to raise money right now in this climate?
Yeah, that's a great question to start off the topic with. So yeah, literally yesterday I was talking with a few VC friends of mine, and what they're saying is like everyone is trying to hold on to their cards close to the chest, and everyone's holding on to their money. They're just trying to support their existing portfolio companies from dying. So they're almost like figuring out among all my portfolio companies which are the ones I should support. And which are the ones I should make sure they stay alive through this downturn and make sure I can give them enough money so that they make it through and then eventually succeed. So a lot of the focus, unlike last year, which was all about getting new investments, I feels like most of the energy is right now on making sure the existing investments live and don't die to this downturn.
That's so interesting you say that because one of the things I'm noticing with VCs is there's a very fascinating phenomenon happening about initial check size. So to your point, instead of just writing big checks, we were seeing big checks happening 21, 20, here's a big check, go for it. Mm-hmm. It's like, okay, we're going to give you a little check and then we're going to see how you're doing. And then we're going to give you another little check, but it's going to add up to a bigger check in the end. It's almost like vesting your options, right? Like, I have not seen that as much as I'm seeing that right now. Is that something else you're hearing about?
Yeah, absolutely. And also the valuations. The valuations has come down quite a bit. I mean, understandably, but it's almost like there's a fine line on valuations where you're almost disincentivizing the founders if you then take too much as an investor, because then there's no incentive for the founder who's going to get diluted multiple times through multiple rounds of the series for the next 5 years. So they will probably look to exit sooner than actually building a really significant company. So there's all of these second order effects, which doesn't seem like it's making an impact. So for example, I was talking to this VC it's a tier 1 VC fund. And I was talking to him and he was like, if you're writing a seed check, why do you care? Seed round, it's going to take 5 to 7 years for the company, if successful, to make it big, get acquired, or hit it, become a unicorn or decacorn. Like, why do you care right now what the interest rates are? And then what the valuation is. Like, you're not haggling for 8% versus 10% equity stake. Like, come on, give me a break. And he's like, no, but that's not how it works. We have LPs who invest in our fund, and we need to show them progress because they need to report whatever funds they have. And all it matters is your next round. It's like, can we show a markup in our investment, which we make today, in the next round, and we don't know how long this downturn is going to last. So yeah, in reality, the story is, yeah, we are investing for the long term, your seed stage, we just care about your team and all that. But in reality, it's a pure financial play. It's basically thinking about, okay, when these people go raise their next round, can I show enough markup to my LP, so they can then get a markup, and we all can go home, take some bonuses, and be happy. So it's such a different story versus reality kind of market right now.
I had, since we're friends and thousands of people are listening to our conversation, but so I had someone from Silicon Valley was like, I wish you were my CEO. And he's like, I know that the company I'm with is going to have to do a down round because they're companies that raised at unicorn valuations, some of them early 21, late 20, that they raised on multipliers. Like we're talking multipliers of like 100x
Yes.
ARR, like just crazy multipliers. I know one company that hit $1 billion valuation with like no revenue. Like,
Oh my God, yeah.
you're right.
Yeah.
And so now he's like, now my stock is worthless and we have to do a down round. And for people who don't know what that is, what Karthik was talking about is when a company raises money at a certain valuation, and then the next round, the climate has changed, the market has changed, the company has changed. Now they have to raise it at a lower valuation because they need money. And so a lot of those companies are doing these down rounds now. So it is a crazy time to be out there. It's not for the faint of heart. And you are very experienced. So your previous company, the reason I said Karthik is resilient, there's so many reasons, but one of my favorite stories you tell is in your previous company, how many VC conversations you had to have to get to a term sheet. Can you talk about that? Talk about talk about what the company was
Yeah.
doing, what the fundraising climate was, because this is a crazy story.
Yeah, absolutely. I think that's a great story to share. So yeah, before I start on that story, just to add to your previous point, yeah, I think it's not completely on the VCs as well, because in the last 2 years, the founders raised at insane valuation, knowing well that there are going to be consequences. Exactly. So I know a company which was generating 3 million in revenue, they raised a Series B at 300 million valuation, and obviously there everyone's going to be diluted underwater. So there's a lot of that as well. So it's on both sides. To be honest, so the last 2 years were unprecedented in terms of like the whole VC play with such cheap money and liquidity in the market. And unfortunately, we are seeing some of the consequences trickle down to people who are not even like in the game then. So, but now, which now coming back to the story of my previous startup, there. So right now it's a Series B company, and when we are raising our seed round, this is in way back in 2018, 2018, 2019, so pre-COVID times. So the markets were still sane then, and everything was like reasonable valuations. There, when we're looking to raise a seed round, so typically when you raise a seed round, you don't have any metrics to show. So it's mainly you're investing based on the team and the product and the vision. But the story is like it took us almost 75 conversations over 9 months across both East Coast and West Coast to get our first term sheet. So term sheet is from a lead investor who is agreeing to lead our seed round. It's like 75. It's excruciating. But here's the funny part. Like once we got our term sheet, we got oversubscribed the next week. So a lot of the people who had said no earlier on, like as soon as we got this term sheet from this famous VC fund, they're like, oh yeah, oh that's great. I want in. I want in. Like what changed? Because seed round is based on conviction. So like that means you're saying you didn't have conviction then, and just because this investor is investing now, you've suddenly got conviction out of nowhere. Obviously, I didn't say that. I'm happy to take their money, but that's kind of what happened, and the round was close. So it's almost a game. Especially in the earlier stage of the company.
Oh, like so many questions. Okay, so I have to reverse engineer my questions. So How did the other VCs find out that you had gone under term? And then like when you finally got that term sheet, like was it what you wanted or did you negotiate it? I need to know everything.
Yeah. So in that round, so we're having all these conversations, and we got a term sheet from a lead investor. So I think we are raising about 3 million. So we got a term sheet for 1.5 million. So it's half the round. So I think those days the valuation I think was like 18 million or something, like 18 to 20 million. It's in terms of seed. And so it was like we are trying to raise three on 18 or something like that. So we got a term sheet for 1.5 million, and it was there's no crazy terms there, because the other things we need to watch out for is like liquidation preference, participation preference. If as a founder you're not familiar with those terms, I would highly recommend you look them up and make sure you very well know about them before going into a negotiation with a VC fund. But it was pretty straightforward. There was no issues there. But once we have the term sheet for 1.5 million, once we got it, then again that came from the network, which I'll talk about in the next topic, which is like how important your network is, especially as your early stage, because a lot of this is done because people know you versus like you have a really compelling vision or a mission you're trying to solve. But we got the term sheet because from our network, and then we had to go raise the other 1.5 million. So we went back in the market. So we pinged all our investors, all the VC funds who we had talked to before, and that's when we were like, "Oh yeah, okay, count me in." I'm like, "What? But you just said no." And in fact, we were oversubscribed. So we went from struggling to raise even $1 to actually going to say no to investors because our round was oversubscribed, right? So, and this happened in 1 week. So it was like 9 months of conversations, and 1 week the round was closed.
And how long did it take from going to term to the money hitting your bank account?
Yeah, so that I think took about 2.5 months, with all the due diligence, because once you get a term sheet, that doesn't mean anything. It's just more that you're entering a due diligence process. So you prepare a data room, share all the, I mean, at the early stage company you don't have a lot to share, but if you're a later stage company, then obviously that's the main thing, where you want to look at all your customer metrics, and if you're SaaS, then all the SaaS metrics, before finalizing the deal. But yeah, it took 2.5 months. So it was all about due diligence, making sure all the contracts, employee agreements, all the things you said were actually true. And then going through the bunch of legal negotiations, lawyers on their side, lawyer on our side. Here's another thing I don't understand why. It's like the VC funds make the founders pay their legal fee, and we had to do that even now, even in my current startup. I just don't understand like why that's a thing. Of course, in this market, I would happily do that. That's a different story. But in general, like that was like, so I'm obviously dealing with their lawyers, paying their legal fee. I think it was costing something like 50K in legal fees alone on both sides, to 25K each to actually do a price round. Then issue all the shares, get all the DocuSign done. So the whole process, I think, took 2.5 months. So what we did is like we probably issued a couple of safe notes to get the money in the bank to extend our runway with some of our existing investors or angels, to make sure we have enough money in the bank before the big check hits our bank account.
So from two and a half months, you're under due diligence. And I am very aware of that process, because what the VC will do, they'll send over the list of all of the items they want in that data room. And so generally speaking, for the listeners, the data room, your attorney, if you don't have an in-house counsel, your attorney, external counsel is going to hold the data room, and you're going to start populating that stuff. And I think, if going back in time, my best piece of advice for founders is document everything and create whatever it is you use, whether it's Google or Microsoft or whatever. Create a folder just for your founders and start putting documentation in there. So, and then thinking about months before you want that money to hit, start creating what will be a data room. And you can go online and find out the types of things these VCs are going to want. And then from the time you had the first conversation to the time you went under term with that VC, what was the length of time there?
Oh, so that was like, I would say approximately 2 to 3 weeks, 3 weeks. So it was like an initial call, a pitch call, then a more detailed call, then a call with each of the partners in their fund, and then the lead. Then I think then had to create investment memo, take it to their investment committee, get approval, and then you get a term sheet. So the whole, and that was fast. So I think it took about 3 weeks then,
Mhm.
to going from the very first conversation to actually getting a term sheet with that investor.
And how did your team keep your I guess mental and emotional energy up? Because that's a long period of time, 75 conversations, plus you have a company to run, you have product to build, you have customers to acquire. I mean, there's no list of things. This becomes like a full-time job on top of a full-time job. So how did you maintain the right mental and physical state to be able to do that?
Yeah, that's a great question, and it's because like that's the number one skill you need as a founder and entrepreneur is like literally being able to persevere, and then have patience and wait through this crazy emotional roller coaster. Because on day one, like one day you're like, okay, your VC says, okay, let's move on to the next call or next move to a partner pitch, and you're like, oh yeah, and then you're like uplifted, and then the partner pitch doesn't go well and you don't get a term sheet, and you're like, oh my god, I need to go through the whole process again with another firm, and then it's just the same cycle again and again and again till it actually goes through, especially in early stage. So I think for us it was, I think we believed in our mission. That's why it's so important to have, as really working on a strong mission you believe in, because this problem has to be solved, this product has to exist in the world, and the VC is more of a communication issue. It's a financial play. But the real question is like, do you have a business? Are you solving a real problem? And focusing on that and keeping that motivating you every day. In addition, I was always into fitness, like whether you're doing yoga, meditation, whatever it is, just to take your mind outside, out of work. Otherwise, you tend to get obsessed, especially as an entrepreneur, because it's almost a baby. So, but that's actually harmful. You need to definitely take time out and then do other things which interest you, even though it might seem like you're not dedicating your 100%. So those are the two ways I would say, like focusing on the mission, and then like doubling down on that, making sure that you have the conviction, and the conviction is not changed because of all these no's. And then also making sure you take time outside work, to focus on whatever you do, whether it's family, hobbies, or anything else. That's how kind of persevere through this emotional roller coaster.
That's great advice. And it's someone said to me once, it was like, you've got to put on your founder hat today. So do you have your founder hat on? Is it on good and tight? Because you need it. And it is exhausting at times. I mean, really, like that I was telling you, like we did a 3-hour presentation and then I go into a meeting and the VC is like, pitch now. And I'm like, okay. And to get to the place where if someone wakes you up at 3 in the morning and says you need to do your pitch right now, that you're able to do it. And that's why it's like I feel so grateful. We were talking before we started the show, just knowing people like you, and we're all in this together because we're all doing the same things, and it is at times it is so challenging. Well, during this time, and we're going to switch gears because once you've gone through this once, you gain a tremendous amount of knowledge and wisdom. During this time, can you recall a moment when you had what I call WKMs, Kartik wall kicking moments, where you're just like, did you go through that?
Yeah, happens more often than I would like. Yeah, I mean, just I think it's just part of, the founder journey. I feel like I mean, not just with fundraising, but pretty much with everything going on. Whether you are, a new customer who's being hard on you, or a new sales hire, which you just did, who's not hitting the targets, or like an engineer who's not delivering. Like it could be anything in the company. There's like a million things which could be thrown at you on any given day. And unlike a stable job at a big tech company, It's not like you're going to keep getting your salary irrespective of your consequences of your product. So there are multiple of such moments, especially in the current market conditions where your execution has to be really, really tight. There is no leeway for any mistakes. And the runway is like, so critical for a founder. And yeah, so yeah, this is like, again, a part of the perseverance, be making sure that we are resilient, and we persevere through this whole process in order to be successful.
Yeah, no, definitely. It is not for people who can't operate well under pressure. Like that is just, I would say, if you cannot operate well under pressure, start a different kind of a business. This is like, don't be a tech founder, and like go work at a tech company, understand it from the inside out before you do it. So you go from this company to your current company and talk about that journey, because this, like, what Ignition is doing is so cool. But how did you go from, okay, now we've got funding, and just finish that story, because you went, then that company continued to grow. And then now you're here. So what happened after finally you bring in this $3 million? What happened then?
Yeah, so that company continued to grow. We really found a strong product market fit in a supply chain space, and today it's a Series B company. They just raised a 30 on 150 million. I'm no longer with the company. I was there till Series A, and then so the company is doing really well. I'm so happy for them, and I joined Facebook as a PM after being there for 4 years. I joined them as a second employee, basically. So I was like, okay, now I need to learn how to build products at scale, because I've been working in early stage companies for a long time. So I decided to join Facebook. Also, obviously, the perks were great. Being a startup founder, and then I really wanted to get the perks and almost like take a little bit of a break for a couple of years while learning to build products at scale. It's funny how I'm describing it right now, because a lot of the other colleagues I speak to, they're like, "Oh my God, Facebook is such a slog. I'm working so hard," and for me, it was like, "Oh, I'm actually relaxing. I don't have to deal with legal, or I don't have to deal with like investor. I don't have to deal with any of the HR issues. I'm like, I just do my job, and like I need to go my thing."
I get my benefits. I don't have to worry about where the money's coming from to pay those benefits. Yeah, that's so
Don't worry
funny. Yeah,
about
you went from
bills.
100 hours a week to like 60. It was fabulous.
Yeah, it's fabulous. Actually, finally got some time for my own hobbies and all that. So it was, it's interesting the way I'm actually describing to you. But after that, being like having an entrepreneur mindset, I was already itching and was ready to go. And at Facebook, I was looking to, I was basically launching all these devices, and seems like there's a lot of structured processes around product development, but not around product launches. For example, the product launch process there was a spreadsheet with 100 tabs, and and there's a tab to keep track of other tabs. So nobody knew where anything was. So I'm like, there has to be a better way to manage this go-to-market process, the launch process, with so many stakeholders. So I met my co-founder Derek through this platform called On Deck, which is like a community of people looking to start companies. I almost like went through co-founder dating, like 9 months, spoke to different people before, like, okay, I want to start this company with you. It's funny. It's almost like marriage. It's like, okay, let's get married and let's have a baby. Like it's a very similar, analogy, even though it sounds funny, because you're committing to at least like 5 to 7 years of your life with this person and building a successful company. So, and then started this company with Derek, and who was also in product marketing for a while. So basically, Ignition is a platform to help you manage your go-to-market plans and product launches and processes, and really think about what's the best way to help you once you build the product. How do you manage the product launch process, and then we've been running it for about 2 years now. It's been exciting. So yeah, I'd love to get any feedback.
So where's your funding now, and where's the company now in terms of number of employees, and you don't have to talk about valuation, but like I'd love to hear where that is at.
Yeah, so we raised close to 5 million. We are seed stage, so we are still early stage. We have about 10 people, mostly engineers, as you can imagine, at this stage of the company. It's me, my co-founder. Co-founder does most of the, there's like build and the sell. That's how we divide between ourselves. So I do a lot of the build part. He does a lot of the sell part. And we just launched we just came out of beta and launched on Product Hunt last month. So now we are actually trying to grow and acquire customers. So yeah, that's kind of where we are. And the valuation, thankfully, we didn't raise at a crazy. We are not. Thankfully, like we didn't raise at like ridiculous valuations. So I feel like we are still in the game without having to worry about raising a down round or having to get diluted when the markets get back up. But yeah, that's kind of where we are.
I love that you're such an optimist when the markets get back up, because I'm an optimist too, right? This is everything for a season. And I feel like if we can raise money in this season, if we can get our products in the market in this season, look at all of the companies in last recession that are household names: Uber, Airbnb,
Yeah.
Instagram, that were all started around people's kitchen tables or at a bar having drinks.
Mhm.
Oh, I have an idea. Those companies now that are the, more than decacorns. So who is the ideal customer? We have raw and real entrepreneurs are amazing at referring their friends to the companies they hear about. So who is your ideal customer for Ignition?
Yeah, the ideal customer for Ignition is either a product marketer or a product ops person who's responsible for doing product launches in your
Mhm.
company. So that's the persona we're going after.
And what size of company?
So I think we really start adding value when you're north of a 100+ employees, because that's when there's real pain in stakeholder management and putting together a launch, making sure everyone is like walking the same walk. So I think north of 100+ is where we add real value.
So in other words, it's not going to be a spreadsheet with 100 tabs with tabs that reference the tabs.
Exactly. And also, like when you do a launch, you just don't go party after the launch saying every launch is a success. You actually have accountability where they can see all the past launches you have done and see like what went well, what went wrong, and you can actually have a structured process around it.
Yeah, and that is so huge, because something you said earlier, the data around unicorn companies and founders having there are myths, right, that founders, like if you have a tech company, then it should be the co-founders should both be technical, and all the evidence actually shows that someone with, say, industry experience but is not technical has just as likelihood of being successful as someone who's, super technical. And you've got to have that balance, someone who can go, create the product and build the product team and be the CXO or CTO, as someone might call them, and that person who can actually sell. And that's where the balance is.
Mhm.
So let me ask you, final question. Well, I have like five, but we'll have to save that for part two. Um, Tell everyone, so someone listening, they're like, this guy is amazing. I have friends who their client is Facebook, and I know the hours that they put in serving Facebook. So I was laughing really hard. And kudos to what Meta has done. Like, honestly, like, hey, but my question for you is, here you are, you go from startup to big tech to startup, and you mentioned, meditation, you mentioned all sorts of things. So can you give entrepreneurs, and this is a conversation around mental and physical health, right? Can you give people advice, like what works for you in terms of keeping your head on straight and keeping that emotional and physical balance at the stage where you are now, especially because you have a ton of experience, but you're also reliving some of the past things that you've already done, right? So how do you stay balanced?
Yeah, that's right. The trauma never goes away. You just
Right.
relive that again and again till you get numb.
I feel
But
like we should be drinking wine and having this conversation, Karthik. Like, oh my gosh, yes.
yeah, 100%. So for me, what has really worked personally is meditation. Uh, I mean, this is something I discovered later. I think the big difference, I mean, the big issue there is like you're so anxious, and you're so anxious, you're so stressful. So it's a lot to do with your mind than anything else. So then how do you calm your mind? And for me, the best way I've found is like through meditation exercises, through breathing exercises. There's a clear link between breathing and your mind. For example, if you're agitated, you're anxious, you can see you're breathing in short cycles, or you have
Mm.
irregular breathing cycles. So the reverse is also true, which means if you can actually regulate your breathing and and then actually meditate, the mind actually becomes calmer. So the reverse is basically reverse engineering the mental health process. So that's what I've found, which has been extremely beneficial for me. Like even before any tense meetings, before I would be like, okay, let me get a glass of wine and then go. Like right now, I'm like, okay, let me do a 5 minute meditation, and then
Mhm.
get my poise and get my focus, and then let me take this call or the presentation, whatever I'm doing, and that has made a big difference. So yeah, I'd highly recommend the different forms of meditation. So there's whatever works for you, and it's also about not doing like 1 hour meditation one time a week. It's more like doing like 10-minute meditation every day. It's almost like its
Mhm.
frequency matters more than so
Yeah.
that's what been working for me.
That's it. I love that you share that. I meditate myself. So every morning I do a longer one. I meditate and pray. And I used to think when I was younger, like, what's your perfect day? And I had all this stuff with my perfect day. Now I'm like, I would just meditate. Like I would love that. So that habit, and then throughout the day, breathing or even a moving meditation. One of the things I love to do is just go for a walk. If I
Yeah,
have an evening meeting and there's a break and the kids are doing their homework and stuff, it's like, okay, I'm just going for a 30-minute walk and just put
yeah,
on some music and just chill out, and that flexibility, because I can't remember who said this, but obviously flexible mind, flexible body. And I think the greatest trait as a founder is to be able to pivot when you need to pivot and have that flexibility, because I've met founders who have this rigidity, and when things aren't going their way, they implode.
yeah,
Yeah.
exactly. Yeah, I mean, I love the saying, the flexible mind, flexible body. Yeah, that's so true. It's because, yeah, it's all about I mean, that's the way you persevere, that's the way you play the long game, is being able to develop that sense of flexibility. So yeah, spot on.
Well, Karthik, thank you so much for being here. When I talk to you, it's like I've meditated and had a glass of wine.
Yeah, I'm so glad to hear. No, I
Well,
really enjoyed the conversation as well.
well, thank you. So, for everyone who is listening, wherever you are around the world, if this episode has helped you, please, we would love a 5-star review. So, do that, share it on social, definitely tag us. You can always go to susansly.com, send a message to info, whatever you're taking away. And if you know of a company that has 100 plus employees, is doing product launches, check out Ignition. And it's always great to support everyone in this community. So, Karthik, thanks again so much for being here.
Yeah, thank you so much for having me as well. Thank you.
Well, all right, everyone. Thank you so much for joining. This has been another episode of Raw and Real Entrepreneurship. And I just say, God bless, go rock your day, and I will see you in the next episode. Are you currently an employee looking to start your own business? Maybe you've been thinking about it for a while and you're just not sure where to start. Well, my course, Employee to Entrepreneur, combines my decades of experience as an entrepreneur with proven methods, techniques, and skills to help you take that leap and start your own business. This course is self-paced, learn on demand, and comes with an incredible workbook. And that will allow you to go through this content piece by piece by piece, absorb it, take action, and then go on to the next module. So check out my course on susansly.com, Employee to Entrepreneur.